think it's at the final stage before potentially the lift is in. And I'm going to show you. I'll show you on this first. Yeah, on the 4 hour. I was showing you the 1, 2, 3, same as this pattern here. 1, 2, 3. Bounces up here and does a consolidation phase. We're in a consolidation phase. Believe it or not, they are actually the same pattern. It's just one of them is. It's more. There's more MAs involved here, but it's the same pattern. I'll show you in a moment. And it's looking like the same as here. It's doing a consolidation phase to gather up the MAs for a final correction down. It'll be the 1, 2, and then the lift. That's what it seemed to be setting itself up for. Because when you look at the other previous patterns, is you get a different. Where is it now? You get a different. Here it is. Here. Sorry a second. When it collapses, there it is. Okay, so when it collapses is when we're down here on the same pattern. When we're here, what happens is that you get the drop down. You get one. See this? This is a 1, 2, 3. I have it as a 5 here, but still a zigzag. 1, 2, 3. The bottom of the zigzag. You get the final lift, and on the drop, what happens is that you get capitulation. Rather than consolidation, you get a capitulation. And that was the same when you go all the way back. Is you get a 1, 2, 3. You get a lift and then capitulation down. Yeah. So they all on the bear trend on the way down. It's been capitulation. Except on this one, it's consolidation. Then you get the drop and the lift. So now these patterns are following the same form, and I'll just show you here. Yeah. So you got the peak, and it comes up. You get a drop. You get another lift. Small drop. You get a lift. You get a deeper drop. So, and then you get one final lift up. So if you look, there's three tops to it. Is you get one deeper drop, and then you get a final lift, a double top rejection here, and then you get the collapse. Yeah. So now this is doing the same. This is doing the same here. There's the drop. You've got the lift, and here's the peak. So there's where you have the peak. Now you've got the deeper drop, and it looks like from the deeper drop we've got our lift here. 1, 2, 3, yeah, 1. Actually, I've been counting this as a top, and I'm going to correct myself. I'm counting this as the first top. So 1, 2. So if you look, if I zoom in here, there's a deeper drop. You get one final lift here, and then you get the drop down. Yeah. So the 3 tops here are 1, 2, 3, and it seems like the 3 tops here are 1, 2, and then potentially another one here. And the reason why I'm saying that is because there's the deeper drop here. Yeah. Where here's the deeper drop here. So we've got a lift, comes down again, and it looks like we're going to do another push, another push along the way. Yeah. So it looks like we are. If you look at the 4 hour here, and it's nearly taking the same amount of time. 1, 2, 3, 4 hour candles, moving in a very small space, and we have 1, 2, 3, 4 hour candles. So it's quite possible that we'll get another bit of a pull down, and then one final lift up, and then the drop. And it is practically following it. It's following it to a T at the moment, yeah. And it's the same but different. So you can see the 1, 2, 3, the lift, the drop back to back test of the wedge, and then the lift. So potentially we're still looking at the same thing here, and then a back test to the wedge, and then excuse me, and then a lift. If it continues to follow form, so it said yesterday it may come back up one more time, and it did. So I'm after hopping in. I'm in on a short here, and my entry point is 46.97, and my stop loss is 47.30, and my target is 43.05. So that's it, and the super tight stop loss. Now I'm expecting it again potentially to come back up here again. If it does do what I think it's going to do and do another top and then head back down, when I see it breaking back down, I'm gonna DCA in, yeah. So essentially, what I'm looking for is another top. When I see it drop, and I see this level being held here, is I'm gonna DCA in. Now on the 4 hour, when I go to the MAs, is really what I'm waiting for, to be more specific. On, there we go. Here, because this is the previous 1-2 for the pump. On the 4 hour, you can see here, this final lift up is the orange one here. This is the 4 hour. The 5 MA in the 4 hour comes down, starts to head back up. When I see the 5 and the 4 hour take a sharp turn down, that's my signal for that it's going to come down. So that's what I'm waiting for. I'm waiting for that 5 on the 4 hour to take a proper dump down. It might try to turn down here and fail and come up again. So I'm looking for that sharp turn down on the 5 MA. So here we are at the moment. Here's the 5 MA. And excuse me. So I'm waiting for this guy to take a sharp turn. And I think this could be dragged out. This is making everybody go to sleep, because this could be another 1, 2, 3, 4, 5. It could be another 4 or 5 4 hours. So it could be another day and a half, sending everybody to sleep here. Yeah. But that's what I'm waiting for, and then I'll hop on this and I'll look for a reversal pattern down here at about 40. What did I say it was? 43.05. I think it's probably gone to about. It's going to hit probably about 42.80, I think. But 43.05 is the 786. Now, also as well, what I'm looking at is this is the SMA, the 50 SMA in the green, and the 200 SMA in the red here. Yeah. So on the 4 hour, you can see the rejection here. Yeah. So I'm looking for another touch back on the 200 SMA as the target, yeah. And when I put it on the daily, again, it's that bounce. It's that bounce onto the 50 SMA, and then up we go. If it's going to go up, I was talking to you before about price action needs to get below this 50 on the daily, drop down, do a back test, and then head on down. That will be the collapse. That will be the capitulation. It hasn't done that yet. Now I'll show you some of the daily MAs. To be honest, it looks very, very spilly. Is what the MAs are showing me and what the pattern are showing me are a little bit contradictory. But then we know how quickly the MAs can turn once price action moves in a direction. Yeah. So that's what I'm watching for. Is if this breaks through, I'll take my profit. It'll drop down. I'll wait for the back test, because it will back test. It will back test to here, and if it gets rejected, I see it topping out again. I'll go on a short, and it'll be a long one. This one here is I'll go on the long. If this holds and reverses and goes up, is I think what it's going to do is pretty much and I'll show you on this chart. And just while we're here, this is the EMAs. Here's the 20 and the 55, 20 white, 55 blue. And the 12 hour, this is on the 12 hour, and the 12 hour is very close to crossing. And I think the 12 hour is obviously going to get rejected. So we get the drop down, and then I think it's going to turn and pump, and the pump will be on the 12 hour pump. Yeah. What I think it's going to do as a pattern. If it does go up, I think just so you're a little bit prepared for it, yeah. If it happens, it comes down here, it gets a bounce up to the yellow line here. So I think it's going to bounce up to 51.52. Then we're going to get a drop back down, probably about a 702, 786 back onto this channel here, and then we'll get a break up, and then expect something really nasty and sharp, and then it will eventually pump up. So something like that. Now the reason why I'm saying that is because two reasons. One, it did something like it here. Look at this. Look how nasty this is. When this was breaking out, this was wrecking everybody who was trying to jump in on the trade. Yeah. So equally, you have the 1, 2, 3, 4, and then 5. But what happens here is on 5, you'll get, once you get this, you get the scooping. So you've got, once it breaks above here, there's a scoop. Expect a big retrace back, and then there will be another scoop, a retrace back, another scoop, and then it'll be a 4 and a 5. So it'll be quite volatile. This final phase will be quite volatile as it goes up. If this is what happens, yeah. So what I'll be looking to do here is that take my profit here, go in on my long here, take profit here, go in on my short here, and then when I go long here, just stay in it for the rest of the pump. I'm going to avoid all this, because this is going to get very choppy. Because when it's coming closer to the breakout, this is where lots of people will look to enter on the confirmation, and you're going to get a confirmation and then a wipeout, and then a pump, potentially even another wipeout, and just wreck a lot of people. So that's what I'm thinking of doing, is trading these swings, staying it for the rest. Yeah. We'll see. I'll trade the swings either way. When I see the swings, that's what I'm going to trade. So that's what I think. That's what I think is going to happen. Target wise, I think the target is going to be between 66 and 72. I think the target range is going to be between 66 and if it goes up 66 and 72. So here's the top. Here's the top of this drop here. Yeah. Now again, when I'm marking the arcs, I generally don't mark the top, because you get is I mark from the spill. See this the previous arc here, and when you get a spill, you get the final retrace and then the drop, and that's normally where the breakout is. That's normally where I mark the top of the next arc. Yeah. And again, sometimes you've got three options here. You've got here as a top, here as a top, and here as a top. So now when I put the fib on from here to here, right to there, is the 786, the mountain peak is already topped out. We're already done, and we're heading down. However, if the skyline, the top is actually here, is the mountain peak 702 or 786 is 64. So 64 plus a bit of a wick through would be a 66. If it's going to go to 72, well then it's all the way back up here, and then mountain peak is going to pop all the way potentially up to the 786 at 71, 72 or so. Yeah, I think it's going to be around 66. But 66 to 72 is what I'll be looking for. Yeah. Excuse me. Again, that's if it pops up. It looks like it's going to, because of the consolidation phase it's in now in that smaller range. Yeah. Okay, that's up there. There's one last thing I wanted to show you. Oh yes, this is my support and resistance lines here, where the 4 hour are the red ones, and then the white ones are the 1 hour. Yeah. And then look at this channel here. Look at this channel here that price action was moving along. Yeah. And it decided to stay like that, just as a basic triangle. Yeah, it's staying in this range. You can see that there. So again, this looks like a bull flag. So now, if you look here, just at where we are now on the daily, is look at this line here. Look at this 1 hour. Also now it's a daily resistance line. So look three times it's come up and it's resisted it. Yeah, it may come up for a fourth. It may come up for a fourth, and then push down for a 43 or so, and then pop up. So, but you can see how solid this line has been holding. Yeah, and equally it's this channel here. It's been holding along here. So if you look at this here, yeah, is this here is nearly a mimic of this, except this one capitulated, and potentially this one's going to pop. This was a capitulation, and then this is a consolidation. So we'll see. But I just wanted to show that, yeah. When you go down onto the 4 hour, you'll see the same. Look how tight that is. And then even down onto the 1 hour, again, as you can see how tight that is there, yeah. And that's sitting under. That is sitting under, when you go to the daily, that's sitting under the 20. Hang on. I got that wrong. 20, is it on the 2 day? I saw it under. No. Okay. I saw there was a 20 EMA sitting across one of the dailies here. Excuse me. Okay, I'll just go through this. You can see that the 20 EMA is holding this at the moment anyway. Yeah. As this looks on the daily, is you can see that 20 MA is coming over here. Here's the 20 EMA being resistance. Here's the 10 pushing down. Here's the 5 that was pushing up. This could easily just turn. This is where it's like capitulation is the 5 turning, and then it just goes. So it absolutely looks like it could spill, yeah. But because of the consolidation here, rather than at the moment capitulation, is we could get a final bounce. There's the 50s, 50 MA the green, 50 EMA, 55 EMA the blue, but a bounce onto the 200, and this is the 50 SMA on the daily. So we could be getting a bounce, and there it is at 42.91. Get a bounce off this, and then a lift up through, and that would be the there's the 786 just there, yeah. And that's what it did on the last pump. That's exactly what it did on the last pump. So it's holding form for now. But regardless, I'm trading the swings, and you can see how tight I'm keeping the stop losses. Stop losses are we've been doing the 10x. We haven't updated the 10x. We actually have to update the 10x, and the reason being is that I was doing my 10x on a specific amount, and then lately I haven't really been holding that line. I've been putting a lot more in, so I have to reset my 10x challenge. And the reason being is, with such tight stop losses, is I can load up. It's not how much I'm putting in, it's how much I'm risking in the stop loss. So when the stop loss is so tight, is I can put far more in because it's such a tight stop loss. My risk is the stop loss. So I'll have to reset. I've got to reset the 10x challenge. Yeah. So now here's the 2 day. Look, here's the 10 coming down on the 2 day, and again this looks fantastic for a turn down as a formation. Is this coming down like this? Is just signaling a dump. Here's the 5 coming down. Look, there we go. The only thing holding it up is the VWAP. There's the 20 EMA, well, the support here, but it looks very good for on the 2 day, the 5 and 10 as a dump. It really does. But look, down here is the 55 and the 100 for support. So, but this does look great for a dump. Is the 3 day. If I wasn't following the pattern of the previous pump and what it did, I'd be looking at this going, God, this looks like it really wants to get down, yeah. But it hasn't broken this, so this level here, which is the bottom here, hasn't broken this, yeah. And this is a 0.5 on the fib here. When you put the fib on this whole pump from top to bottom, you can see here that this did a 0.5, hasn't broken the 0.5, yeah. So its intent seems to be to stay up here and not actually get down here. Now at some point, price action is going to have to come back down to 38 and confirm this resistance level at 38 as support. So if we pump up now, we are coming back down to 38. Now we could go all the way, it could break up, it could go all the way to $1.50. It's still coming back to 38. So at some point we're coming back to 38. I suspect it's after if this pumps, I suspect it's after this pump, and I'll show you now, yeah, while we're here. Let's say this goes to 66. Okay, now here's the bottom, the 1, 2, 3, 4, and then 5 to 66, yeah. Is how does it come back? There's 66. How does it come back to 38? Well, we put a fib on it here from top to bottom. So there's the bottom there. And if you look at the fibs coming back down here, is the 702 is at 36.75. So we get a lovely pump here, is we get a 3 steps down, and we're coming back down to a 702, a 786 range, and then we'll have another arc. It'll be a arc like this, yeah. It'll come up here, and literally it's gonna follow this reversal pattern here. 3 steps down, double top, first drop, mountain peak, third drop, final peak, final bounce, and then pump. Here's skyline, third spike, first double top, first drop, mountain peak, third drop, final peak, final bounce, and potentially a breakout. Rinse and repeat, rinse and repeat. So we're just going to have another one here, but this one will actually should come all the way back down here, and it'll be a broader range. It'll be a deeper range. We'll have very nice swings on this one. I believe so, yeah. And it'll bring a bit more volume back into the market, yeah. Again, that's if that holds, yeah. Could it crash and go deeper down? Yes, it could. Yes, it could. But anyway, let's just focus on where we are right now for now. So here's the 3-day. Again, look, here's the 5 turning over. Here's the 5 rolling over. Here's the 10 coming through. Again, proper formation for a spill is here's the 20s coming up. Here's the 55 as support though. You see the 55 on the 3-day. So I'll fly through these now. Look, there's the 4-day. Like, look at the 5 coming down on the 4-day. It's solid, but then look, there's the 10. The 10 looks like it's actually resistance here. So again, this is for the turn down. It's looking fantastic. But again, you got support here below with the 20s, yeah. So I'm not going to talk through them all. This one, let's see, the 5-day looks more pumpy because look at the 5 up here. Here's the 10. Here's the VWAP. They're all lifting up. The 20s down here, or sorry, not the 20s. The 50, the green 50 and 55 were resistance for this whole swing here, yeah. And it looks like we're going to get a bounce on the 20 EMA here, the 5-day, and then up we go, yeah. And again, something similar on the 6-day. But then here we are on the weekly, which is the last one I'm going to show you, is look at the 5 turning down. On the weekly, the 5 turning down. Like again, if I'm just watching the MAs, the 5 is turned down on the weekly, we're going for a dump. You know, even if we go back up and touch it here, is for sure we're going for a dump. But again, this is where we might get tricked. It comes down and there's a bounce off the 10 or so here. Now this is why I might go a little bit deeper. 42.52 is we may not get 12 o'clock. Not 12, Wednesday, Thursday, Friday. Yeah. yeah, I'm just thinking, would it have time to get down here? It may price action may come down and bounce off to 42.52, bounce off to 10 here, and then the lift comes in, yeah. And then you can see the range. You can see the range here is, I believe here's 66. There's the pi cycle, and then there at 71 is the 100 MA. So I think one of those are the range, yeah. So you can see what I'm thinking. And then this is the last thing I'm actually going to show you, because I've said everything. I've said everything except I want to show you on the stocks. I'm just going to focus on the bigger time frames. I'm going to focus on the daily. See the daily here? The daily is down. Is this pump could bring the daily back up to the top. Bottom right here, the one in the blue box. This is the daily. The pump that potentially is coming will bring the daily stock RSI back to the top, and then it could align itself with the weekly, which needs to come back down. So now the daily goes up for the pump, and then the daily and the weekly come down for the journey back to 38 or lower, okay, or lower, because that weekly coming down is a minimum of a 2 to possibly a 4 month movement down. So it's a pretty big movement down. So coming down for 2 months, it's hard to imagine that it's just going to go to 38. But it might be a weak push down. If the bulls are back in, this can be a weak push down. It'll still come down, but it'll be weak, yeah. And it would be back to what I was showing you here. Is it gets the pump up, and then we have the drop back, and then look, you get these big ranges that it moves in. And again, hopefully for the lift up, you get this big range, and this will allow the stocks on the weekly and the daily to reset themselves for the turn up. So that's potentially what I'm looking at there, yeah. So that's it for now. If I've got this wrong, and this turns and pumps now, I'll be looking for it to pump, and then I'll be looking for it to do a retrace. So very simply, if this breaks up and just starts to head up, it will at one point need to take a breather. So let's say it just breaks up, goes to there, and comes back and takes a breather. Starts to do a consolidation here. Then that's where I'll look for my long position, and then I'll go in on the long, yeah. But for now, I'm in on the short, and I'll look for the same. I will look for the same pattern when it comes down here, yeah. Down here, and be looking for a consolidation and hopping in. So that's where I'm at, yeah. Okay, so that's me. Enjoy the rest of your day trading, and if you have any questions, let me know. Any questions about the trading strategy that we're applying now is super simple. The only thing that can be a little confusing at times is getting it backwards. Is if it's at the top, it's very simple. You got a top, and then look, it does this back test. You put the fib on, and then you see it coming back up. You put the fib from the bottom to the top, and you look for a 702. It'll hit the 786 a lot of times, and even go a little higher. But it hits the 702 nearly all the time. If it's a reversal, if it only goes to the 05 and heads back down, sometimes you miss it. You got to follow it down and get another swing. So the 702 is the sweet spot. So that's it. It comes up, it does a drop down and heads back up. There's your range, and look for your 702. That's it. But on the other side of it is this one here. This one here is a V-shaped recovery, and drops here, and then it comes up. So now, if this is the case, I wouldn't mark it from here. I would mark it from there, because you see this long wick, then drop like this. So here is now, and then it goes to here. From here to here, I see the range. So I put it at the top to the bottom here. So this is the range. And again, I look for my 702, excuse me, and then up it goes. So that's the That's just the thing to get used to, yeah? Where this one here, there's no long wick on it. It's the same thing. There's the bottom. It lifts up, okay, and then it starts to come back down again. So now I have the range is I go from the top to the bottom here. 702. Look at that sweet one. 702. There we go. Barely gets tested into the stop loss. Stop loss will be just below the bottom here, and then up you go. And if you're going to ask yourself, how much do I put in the trade? Well, how much is your stop loss? So don't worry about how much you're putting in. Look at the risk. How much is your stop loss? So let's say you're used to putting in whatever. Let's say $100 as an example, and you go, I'm going to put in $100 because normally I'll play a bigger stop loss. Okay, and you go, okay, I'm willing to risk 15% of it. So you're willing to risk $15. Well, if you get your target here and you check your stop loss will be, if the bottom here is 46.24, is put your stop loss at 46.15, 46.10, a little bit below, just to allow in case it wants to do a double bottom. The odd time it does a little wick through, but other than that is no more space, yeah? So let's say you're trading $100, you normally like to risk 15. Well, let's say you check your stop loss here and you go, look, your risk is only $5. Put in $300. If you're willing to risk 15 as a normal on your 100, if your stop loss is only a $5 risk, well then put in 300. You're still risking the same amount in your stop loss, but yet the amount you have in is far greater, but your risk isn't greater. So think about that when you're putting in your trades. Yeah, it's the reason why I need to reset my 10x challenge. I'm not sticking to the same amount I'm putting in. I'm more measuring it to my stop loss risk than my load risk. So that's it. Something to think about. Other than that, that's me done. I'm going to hand you over to Mihaela.
Hello everyone. Let's see where we are today. Finally, we have some action in the charts to talk about. We're going to start with the DXY. The DXY delivered yesterday. Finally, this was the movement that I expected and anticipated since Monday for Ethereum and Bitcoin. And Monday made a fool of me because it made a drop. But that was, I guess, just a fake move Monday to rebalance the books before the start of the let's say the volume week, so to say. We had a drop yesterday in the DXY. We have a drop today in the DXY, which meant a pump yesterday, a pump today. Now the DXY hasn't yet reached this line here, which is the previous channel line. And by previous channel, I want to show you where all this mammoth is coming from. So this is one big channel coming all the way from February 2021. So it is a very long-term channel, and I do expect it to be back tested. If it holds on back test, needless to say, the DXY might continue upwards. And the reason why I'm saying that is because the daily stochastic is coming to its bottom level. So I don't know how much the daily stochastic can sustain this movement. The weekly stochastic can, however, keep pushing down. And if the weekly stochastic on the DXY keeps pushing down and the DXY keeps moving down, crypto most likely will be heading up for the short term, as in coming week/weeks. I still have to monitor to see how this is how far off this is gonna.
Just wondering, I've got to say, when you're talking about that, did you see the last pump?
Yeah.
It took 6-7 days.
6-7 days. I was just going to say that looking historically, it takes about 2 weeks. It takes about 2 weeks for the stochastic on the weekly to reach the bottom. Here it took 4 weeks. Here it took 4 weeks. So between 2 and 4, I would say 3 weeks. And it looks like we have 1 more week to push down.
Yeah, but I'm just saying the last pump, well, for XRP, the last pump took 6-7 days.
To come down?
No, to go up. From
to go up.
Well, sorry, from the 1-2. Yeah, see, the 1-2 was dragged out for ages. But you see, when it actually took off, it took 7 days.
Okay.
7 days. But if you add on the 1-2, is you're tagging on a load of other days. But the real pump only took 6-7 days.
Okay. So would it make sense for XRP to go up for, let's say, one more week?
Go once goes up.
Yeah. Okay.
Once.
But that you're talking about after the reset to 43.5.
Yes, once it hits, if it follows form, 43.5 from there up is about 6-7 days.
Okay, I got you.
Just if it follows the form of the last one.
Yeah. Which would now the reason Roy's in an XRP short and I'm in an XRP long. I'm saying it's gonna go up to 50 and it still wouldn't break 4 going up to 50. It would still be in line with.
Well, the only thing is at the moment, if it goes up now, the 1-2 is done. It will have done a correction back to an 05. So as a 1-2, it's a very weak one.
Okay.
This is why when it goes up and goes back to a 786, it's a full correction.
Okay.
And as a bounce, you get the deeper
the correction, the stronger. Yes.
Yeah, exactly.
The stronger the lift. Yeah, and so this one only has a 0.5 lift
at the moment.
Yeah, at the moment.
So it's a sign that it's a weaker pump.
Yeah, absolutely.
I'm not saying it can't, but
Yeah. I am watching it because even I don't want to. This is the last point in the DXY conversation. So while the weekly and the daily indicate more movement downwards, which is more lift for crypto, the 4 hour seems to have reached a bottom here. Now we know the 4 hour can stay at the bottom for a while. I've been keeping an eye on it for too little to know how long this tends to play out. So if I am to look at it historically, I can see that this stretch in the 4 hour, like from here, Monday the 24th of October to today, one day. There's another one similar to that here. There's another one similar to that here. So yeah, okay. It can stay at the bottom. It can stay at the bottom for a while until moving upwards. But yeah, I am a little bit mindful of the conflicting stochastics between the 4 hour, the daily, and the weekly. So that generally means two things. It's either that the short term will take lead and will reverse, or we're going to have some sideways until the long-term resets at the bottom, one or the other. Now that's the DXY talk, clear as mud. But the long story short is we might have a nice, we might continue the upwards trend if the 4 hour allows us to. So that's what we should be watching for if you are in a long continuing downtrend on the DXY. If you are in a short, the opposite. Once the DXY reverses to the upside, I think we're looking for a crypto reset to the bottom as well. Now, the coins, Ethereum and Bitcoin are a lot easier to discuss. So what we have, I'm going to start with the weekly to show you if there's been any change, and the weekly stochastic has turned up for Bitcoin. And on the daily, we have the breaking of the W pattern and the validation of the W pattern as an accumulation pattern for this swing. Now, I was telling you on Monday that we have two W patterns. So this is the small W pattern that is supposed to take us up to 25K for Bitcoin. And we have a bigger one, which is really, really juicy, and I guess all the moon boys would be looking at it and saying it's going to take us up to 31K. And that bigger one is the one coming all the way down to here. What's there? Okay. All the way down to here with the W here. And for that W to be validated, we would need the breaking of the 25K. So we've got two accumulation patterns, the small one that we've just validated now, and the bigger one that we haven't yet validated en route to 31K. So this is the daily story. This is the daily trend. We are officially for 3 days above the 20 EMA, so the narrative changes. We still have space in the daily RSIs to go upwards. I'm just gonna remove this because now we don't need it. What we would need now to see in terms of continuing momentum is a continuation of the 20,600 as support. So this needs to hold. Whatever back tests and whatever corrections we're going to do today, this needs to hold. And by that I mean we will have let me show you which I'll have to set up new levels for this, which I will do today. I'll clone this. So what we will see today is most likely a correction of this swing. So we've had, now again, I find it hard to read this as an impulse wave. I think the only impulse wave, not the only, the most recent impulse wave that I can read, because I see the 3 stages really clearly, is the one right here. So this was step 1, clone, step 2, and this is a 1 hour. This is a 1 hour swing, step 2, and we had step 3. And I'm going to put this slightly higher. There we go, because this is where it's support and this is where it becomes resistance, and it's very relevant to where it stopped now. Now what we need to see now is on the back test, and of course this swing. Now we're talking about the short term now, and the action on the short term is quite relevant on what's happening in the bigger picture. 1, 2, 3, 4, 5. So this would be the swing up, and if we are to put a fib on it, there we go. 786, 702 would be 19,200. Can it go there? Correct. And move up? Yes, absolutely. The daily movement allows for a 786 correction. Now, compared to XRP, Bitcoin and Ethereum are in completely different spaces, because XRP has already is at the top of its pump, and Bitcoin and Ethereum are just having another go at another rally. So XRP is one rally behind Ethereum and Bitcoin in this lift. So what we need to see in this correction, if we are to look at the momentum upwards continuing, is as simple as that might sound, holding the 20,600 on the daily. So holding this level, whatever happens today, we need to close above it. Even, for instance, even if today in the correction we close below it, tomorrow we need to regain it. So within the space, within the day, the way we did here with the 20 EMA, so we closed below it, it signaled a rejection of it, but then the next day it regained it, and that is the trickery of the breakout zone. Price action does that. It does these fake moves to the upside and to the downside to catch liquidity from shorts and to catch liquidity from longs, to catch both sides before going one way, because it can only go one way. So even if we lose this support today, unless we lose it for 2 days in a row, signaling a downturn, the movement upwards still has fuel to continue. So just to make the long story short, what we're looking at on the 1 hour is definitely a bearish divergence here. The 1 hour and the 4 hour stochastics, the 1 hour and the 4 hour regular RSIs, not the stochastics, they need to reset. The 4-hour can stay up there for quite a while. Like we can see what happened here. This is why it's super tricky to trade without the stop loss. And I was telling you on the Ethereum chat that I like to trade these swings up and down. I know it's quite risky, but with the 702 strategy and the tight stop loss, I am right now unstoppable in terms of trading the swings. So it is a brilliant strategy. What used to get to me first was getting trapped, because I would be getting my capital trapped since I refused to use stop losses, because I was waiting for the confirmation of the double top. But now, because I use the 702 retracement, I don't need to wait for that confirmation, so I gain a better entry point and my stop loss can be a lot tighter. And what I mean by that, I'll give you an example. On the 15-minute, this is gonna do something. This swing is gonna do something along these lines. It's gonna come down, and then it's gonna hit, for instance, maybe the VWAP, and then start coming up for a double top. Now, I am ruthless with my stop losses, and I'd rather Roy leaves a little bit more space here. I leave very little space here for that double top. I leave very little space. It depends on you how much capital you want to risk. I like to risk very little, because I'm all day looking at the charts. If this comes up higher, then I wait for another entry. And if this is it and just spikes me out, I'm better off waiting for another entry once the downturn has been confirmed, rather than getting stuck with a bigger stop loss. I don't. That's my thing. I'm much tighter on the stop losses. But it's up to you, because again, you can start with half of your position and put a little bit more capital in the stop loss. So just to finish, let me start let me start again to show you how I would use this. So I'll remove this, because I want this to be caught in the recording for you guys to see. So let's say this is the top, and it comes down, it hits the VWAP. Now, once it hits the VWAP and it's getting rejected and it starts coming up, what I do is I put a fib retracement on this. Well, it's an extension rather than a retracement, because it's going up. There we go. And I see where the 702 is, right about here. I will put a limit order at the 702 and a stop loss a little bit above this, just a little bit above this. And then I let it run. And then it comes up, it hits my limit here. If it makes a higher high like it did here, I let it run. And I wait for the next V with a possibility of coming up. So for instance here, at the moment I'm not trading Bitcoin. I've shifted all my capital into XRP, because the range is a lot more, was a lot more trade-worthy last week, and my attention is much more on those swings there. But for instance here, I would have been stop lossed out, and I would let it run until it did something along these lines. So this one here would be the perfect swing to put a 702 entry. And yes, it would cost you, so just so you get how much that would be, from here to here, it would be a 6%. So let's say this one would cost you 6%, this one would cost you 6%. How many higher highs of this proportion does a coin do? I checked a couple of swings historically. I haven't found more than 2 stop losses, which is generally around 6 or 7% being invested in this. And you must see your stop losses as investment to catch the big fish, because if you catch a sweet entry like this, then you are There we go. Even a 0.5 retracement down to the next support and resistance level from here to here would be about 50%. So not only like 6% stop loss with the 50% gain, and this is a minimal retracement. A 0.5 retracement is a minimal retracement. It's a 10-to-1 risk-reward ratio, so it is a wonderful risk-reward ratio to place a position on. But again, if you are not okay with losing 6% here, losing 6% here, you might decrease your position, put half of your capital in with that 6% stop loss, and in that way you can save the other half to DCA. Let's say when it breaks the 20 on the 1 hour, when it breaks the 55 on the 15-minute, DCA in on the way down. And in this way, you might manage your emotions better and your risk, your relationship to the risk of the trade. But once you do a couple of trades like this, you'll see that the mathematics is just overwhelming. Like I had my doubts initially about using stop losses because again, I didn't want to lose anything. That was my initial thought. Then I realized I'm losing more by being trapped in trades. Where we are right now, the time will come when we'll have large runs upwards or downwards in terms of the swings, and we can just let a trade run and we'll make a lot of profit. But at the moment where we are in this range trading, it's excellent to catch one of these swings with a small stop loss. Anyways, so long story short, Bitcoin might do a correction today, 0.5 down to the 19.6. I'm pretty sure you know these levels by heart now. 19.6, 20.6 is the big number to close above today. It would be great for the uptrend. Whatever happens today, if we close above that, the uptrend continues. If we don't close above that today, tomorrow we should do it. So if we close 2 days below that beautiful W line here, then this W is invalidated, and you know, all the daily goodness sort of like is lost. The 55 on the daily is also 20k, so if we don't hold that, if we don't manage to close above that, again we have a big line of support lost. Now, is there a question there?
Yeah, Michaela, Lee's on a call, but he just sent me a message.
Yes.
He's asked about the possibility of DCAing at 26.50 or at the 0.702.
Lee, I think that would be Nathan. I know it's Lee's question. I wouldn't DCA, to be honest. I wouldn't DCA because it's really tricky. Once it gains momentum, it could just keep going. If he is okay with putting that much capital in, I would. That's perfectly fine. That is a strategy. This is what I used to do. But he might have to wait. Now, the levels on the day are not completed yet, so there might be another push up to the 21.5, which is the M5. Generally, it likes to go from M3 to M5. I haven't seen an M5 in a while because of the push down, the general downtrend. But yeah, the short answer is I personally wouldn't do it. I wouldn't DCA where we are right now. This is the situation where I would get caught DCAing and having to wait it out for weeks, and that's not where I would like to be ideally. I would say for Lee, if he watches it today for that retracement, because we might have that retracement, and it would be good to see if he can get out, maybe with some profit, or maybe just you know, taking a small loss, because it's a really tricky time to hold a big position. But if he's okay with that, he can do it. Like the RSIs will need to reset. This lift is not sustainable as is. On the 4 hour, it's not a sustainable lift in its verticality. It's way too vertical to keep going up like that. I hope that answers the question.
I'm not at the DCA stage myself, so that went over my head. So.
Yeah, like so if you how can I say it? Once it confirms this W, then the next there are levels upwards that that price action can go to. So I'm not sure this lift is complete. So I DCAing. If I were right now in a short, I would try to put a DCA as high as possible. Maybe the 800 here on the 4 hour, 22.5, if your liquidation allows you. That would be the most advantageous position to DCA in, because that would give you the biggest bang for your buck, so to say. Like it's, I wouldn't commit capital right now where it is, because this is where it can get to. It has confirmed this W. This is the next level. And I have been trapped myself, and I'll show you the situation here. Like, see how many times, how long the 4 hours stayed in the overbought. It stayed in the overbought for literally days, and it kept going up, 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 up. It was a slow, drawn out process of going upwards, moving upwards. So the same can happen here until it gets to here. So that would be my level for DCAing. I wouldn't be DCAing now. I would let it settle now, because now it needs to do a back test. It broke the 19.6 in as far as I'm concerned. It will have to back test it. By the end of the day, it will have to back test it. And by back testing it, what it will do is it will come down and make a bit of a wider base, so that it continues upwards. And I'll show you how it does that, because it's actually a beautiful thing how a coin manages to gain footing on the uptrend. It will make a channel like this. Do you see what I mean?
Yeah.
And that would be a sustainable way to go up step by step, rather than, so between okay, maybe here or here, we'll see where how this goes. Yes, so that would be a sustainable way to go up. If the market makers push it up to 22.5, that's where I'd have a DCA set, because that would bring my entry point to a nice level. And from there, like when it gets to 22.5, for sure it will have to backtest something. So again, let me summarize this clearly, because sometimes I waffle until I get it right in my head. You have two options. I would see two options right now. First, wait for a back test of the 19.6, and at the 19.6, either take your profit or close the trade, whatever suits you in terms of your capital. What do you want to do with your capital? Personally, I would close the trade, the short, at 19,600 and wait to see what it does there, because that is a big level. If we close below the 55, if we close below the 20.6, today we're looking at more movement downwards. So again, I wouldn't want to be caught in that. I would either de-risk or close and see what it does, because of where it is right now. While waiting for that, I would place a DCA at the 22.5. That would be my level for DCAing in case, and I would sort of like proof my position against a super lift, because if it goes up to here rather than having money in the margin and waiting it out, I'd rather have it. I'd rather have this lift improve my position. So when the DCA goes in at 22.5, if it goes up without a retracement, without a channel from where it is right now, it will have to backtest. It will have to backtest the 20,000.6, and that once, when I say this right now, it would make sense. Once this has broken this midline going up to here and then coming back down here would be a very possible scenario, a very likely scenario. And if you have your entry point, now I remember Lee had an entry point at around 19,500. I don't know if I'm right.
Yeah, that's right, because I came in at a similar position.
Okay, so if you have your entry point at 19,500 or 600 right about here, and if you put your DCA, can you have, let me see if your liquidation allows you to. You would have to be a little bit over margined to put this in. So I don't know if your capital allows you to put some money in the margin to cover for a 22.5 liquidation, and putting a DCA in here would also give you an extra lift in the liquidation. But if you are here at 19,500 and if you put your DCA here, you will be gaining 7% in your, so if you put the same amount, your entry point will be up to here 21%. And I know that sounds, this used to be how I used to trade. So if your entry point is here, when it back tests from 21 down to, let's say, 20,600, it's a 2.3% drop. But because you've DCA'd, you have double the capital, so this becomes 5%. So you can actually leave the trade with 50% gain. 5%, 10x is 50%. So I would put my DCA at the next level, which is 22.5, to make sure I have that gain. That's because if you are committing more capital to this trade, you'd better have at least a nice gain. And if it gets there without a retracement from where it is right now, it will for sure come back to correct. And again, maybe make this channel like this. Somewhere along these lines. Again, I'm just anticipating the trend, but I believe again, Bitcoin is very irregular in this, so it will be making an upward channel to come out of this consolidation. Does that make sense, Nathan?
Yeah. Thanks for that.
You're very welcome. That's why it's good to have these sessions, because I can explain more in person and give you more examples. Super. So yeah, that's how I would do it. That's how I would do it. Again, there is the emotional stamina that is required when having more capital in a trade in the margin to make sure you're covering that 22.5, 22.6 liquidation, and then when you put your DCA for this one, it's going to give you extra liquidation space. But again, I don't think it's going to go past the 22.5/22.6 without a retracement. Like, it cannot go up like this vertically. I know that it did it here, but here it's sort of like was, it was coming from this very abrupt move downwards. This was the yo-yo effect upwards. Here we need a little bit more of a lift. And if we're looking at Wyckoff accumulations, because this right here, I believe, is a Wyckoff accumulation, they always turn into a channel out of that. Where is it? Perfect. So this here, this zigzag here is what I expect Bitcoin to do. So go up, this would be the 22.5, come down to 19.6 or somewhere around 19.6, 20.6. It depends on where it stops. I think 19.6 would be the more likely one, because that was the support and resistance, and then continue upward. So that would be the channel upward for the lift. It doesn't go up in a straight line, the way it doesn't come down in a straight line. Okay, now for Ethereum, we have a similar situation. We have a breakout. So Ethereum's doing what I anticipate Bitcoin to do. So Ethereum is one step ahead of Bitcoin, because yesterday Ethereum broke this previous high. It came up to the next level. Now this is why I believe it's the tougher call right now to DCA, because we can have it. We can have price action continuing bullish momentum. Let's not forget we've been in this accumulation for, let's check all this drop from where it is, 11th of September, almost a month and a half. So this has been going on for a month and a half. And the bulls are just in standby right now. So this could keep pushing up. That's why I am very careful to tell you, because I used to be no stop losses and DCA all the way until the recent. Again, the bear market challenges are quite different from the bull market challenges in terms of trading, because there are swings that just defy all imagination, like XRP did a 50% swing in a week, and Ethereum did this 103% pump in from the Wednesday the 13th to 14th, 13th. Was the whole month? Okay, that was a month, but still it's 100%, so double its price in a month. So this can happen. And if you started, for instance, shorting here and not taking profit here, you know, you are stuck with your capital until all of this finishes. It does come back down eventually, which is what I anticipate might happen in the long run, but we have to see that. Roy is talking about a long-term pattern for XRP that's showing a push down, a swing down. I have to tell you that about Ethereum and Bitcoin as well. So here we are breaking this divergence line. Let me remove all of these markings because they are not relevant anymore. Okay, and I will be making this line nice and strong for you guys to see. So this is the channel, the daily channel line, and if we are to bring this even a little bit closer, I had multiple options here, but I constantly simplify it for the sake of visibility. So if we are to put this like so, here we are breaking this descending, I think it's like a blowhorn formation, descending wedge formation. So when we break out of it, we have an overflow area that we need to break as well. So that would be our vertical level. There we go. This would be the 17,000. 17,000 is where I believe this is going to take us. 17,000, 1700. Sorry, imagine Ethereum at 17,000. So this is where I believe this is going to take us, just by the rule of the W. And that's just a very basic pattern. I used to be a pattern trader. I would trade these W's up and down. This is a bum, and it goes all the way up to here. So that's the way a W works. If we are to be a little bit more technical and to put a support and resistance line to here, and then take this from the neckline to the previous drop, and then move it up here. The target would be 1633, and there is an additional $150 up to here, this neckline, which is where I believe is going to get it, because it's going to break this divergence line, and this divergence line will, or trend line down, will give it oomph to go to the next one. So I have a lot of confluence in terms of trend lines here. What we need to see for that, look at these candles, what we need to see for that is a continuation of the 4-hour momentum. This is the 4-hour momentum, and unfortunately the stochastic RSI looks exhausted. Here is the target of the triangle that was met to a T. What usually happens in an uptrend, I'll show you in the previous ones, is we come down and we backtest the 20 EMA. So we do the lift, we backtest, we do the lift, we come down, do the lift, we backtest. So we come very close to it. Now Ethereum makes very shallow corrections on the way up. So please be mindful when trading. So if you have a look at these 4-hour swings, they do 0.382 corrections. Ethereum is notorious for those shallow corrections. You don't see a 0.5 very frequently. This one was barely close to it. So these 4-hour swings, which are 15-minute swings in themselves, be careful if you're trading them. I wouldn't trade the 15-minute swings here. I would trade the 1-hour swings here. So you would see those signals. And I would be waiting for, if you want to, there are two ways of trading here. You can go with the trend, and the trend is up. We are above the 20 EMA on the daily. That changes the narrative, being above the 20 EMA on the daily. You can wait for those retraces here on the 20 EMA on the 4-hour and follow it up. A retrace on the 20 EMA, follow it up. Retrace on the 20 EMA, follow it up. 20 EMA or the 55, double bottom formation, rounded bottom formation, double bottom formation. So you can trade these swings up and down. Down, I would be more cautious with Ethereum because it is very tricky. It can go up in a very steep ascent and then do again a shallow retrace. It still follows its trend lines, but as the situation is right now, we don't have a channel, we don't have a structure that we can follow. I would be very careful. I would still be trading with a tight stop loss and waiting for a 702 point of entry. And again, if I am to put this on the 15-minute, for instance, here it looks like this is way too shallow for even for the 15-minute. I would be waiting for a drop, let's say down to the 20 or the 50, and then put a retracement, and I'll show you what I mean. So down to the 50, and then when it comes up, I will put a fib on it. Probably the 702 is there. There we go. I put it at the 786. So 702 or 786 with a tight stop loss above the previous high, because if Ethereum does higher highs, chances are it's going to keep going up. That's what it likes to do. So I would still be trading it down because the RSI indicators, the RSI signals tell me we need a breather desperately. This is a bearish divergence as well. It's heading down, so it would be good to, it's a good range. It's a very nice range to trade from, let's say, an M4 to an M2. It's a 9% range, so it's fantastic. Even if we are very conservative about The pivot point of the day, it's 7%. Let's say this swing wants to retest the pivot point the way this swing retested the pivot point. It's a 7% swing. It's fantastic. It's a beautiful 15-minute swing. Get your signals on the RSIs. Get your signals on the vector candles. So remember, purple vector candle at the top means a descent is about to happen. Purple vector at the bottom means a reversal to the upside is about to happen. The opposite for the blue vector. Blue vector at the top means where the swing to the top is finished. Blue vector at the bottom means a swing to the upside is about to start. But again, the vectors are a little bit more unreliable now because the market makers are pushing more liquidity into the market, so they might be deceiving. The RSIs though, the bullish RSIs, the MAs and the trend lines are not though. So we can expect a retest of, where is the intermediary level? Let me put an intermediary level for you guys right about here. Right about here. So this would be the intermediary level, which it's not an accident that it is the 20 on the 1 hour. The 20 on the 1 hour hasn't been tested at all. I doubt it will. This swing can continue going upwards without the test of the 20 on the 1 hour. So again, even that intermediary level and that back test would be a 5% swing. Definitely worth a trade, especially when you put in a 6 or a 5% stop loss. And again, if you're unsure, put 50% in your capital, and then put the other once the 20 or the 50 on the 15-minute are broken on the way down. And in this way, you're DCAing on the way down and having a little bit more confidence in what's going on. Okie dokie, so that's me for today. Just to make the long story short, we might be looking at a retrace. The levels to watch for Bitcoin are 19.6 for today, and for Ethereum, the intermediary level to backtest is the 14.5, or a little bit lower, the 1400. So these would be the two intermediary levels for Ethereum to backtest. And if the backtest holds, so the same trend line that we broke here, this W pattern holds, if the trend line holds at 1400, we're continuing to move up. So that's it. Let me know what you guys think in the chats if you have any questions. Good luck trading, and I'll see you in the chats, and I'll see you tomorrow morning.